Alrighty, so here we are again, Coach Roel, grabbing Scott Meyers out of his busy schedule. It's been a crazy 2 weeks. I don't know, it just seems like it blew by for me, Scott. How about you? How's the last 2 weeks been?
Yeah, kind of hard to tell sometimes what day it is, and to see another 30 minutes in front of me, let alone another 2 weeks, been a little hectic, but we'll take it. It's been good. Obviously, a lot of good things going on around here. The industry's doing great, so no, everything's great, and glad to be here.
Excellent. Well, as always, I know your time is very in demand. So I wanted to choose this question out of my own particular interest. And I have a feeling that others have a similar question on their minds. I was going through an article and I saw on Inside Self Storage this quick little quote. In the article, it says, the relative strength of self-storage properties is attracting new buyers.
Mm-hmm.
We're experiencing interest from equity groups pivoting from retail and hospitality verticals into storage and industrial sectors.
Mm-hmm.
So what I wanted to ask you, Scott, is how you think this might affect the investors in our community in particular,
Mm-hmm.
and the space that we operate in. Is it good news, bad news, and what do you think?
Yeah, so kind of twofold. I mean, we can learn a lot from what everybody's doing in the marketplace, and so for our folks, and we've been seeing this, as the returns are no longer in the stock market, we have hedge funds and other folks, pools of money that are coming into. They're searching on the internet, looking around, and talking and finding what sectors of the economy are doing well during the pandemic and a recession. And no surprise, storage is always at the top. So yes, yet again, just like in 2008 and in 99, we have a whole pool of new buyers that are coming into this space, some with money to be passive investors, and others are active that are looking to take down facilities themselves and be the owner operators. So if you're an existing owner in the self-storage space, and you're ready to sell, it may be a good time, especially this time around because interest rates are low and therefore cap rates are still really low, which means a high valuation. So if you are an owner that is interested in selling at this point, it bodes well for them. If you're a buyer, you're going to be competing with more folks that are looking at existing facilities. So if you're looking at especially existing cash flowing facilities, because that's what most of these folks are looking for. They're chasing yield. They're looking for cash flow right now with some upside. And so if that's what you're looking for, you're going to be competing against more folks, but then also in many cases some uneducated folks. And I mean this in a very kind way. It's just people that don't understand storage, and they may be bidding up prices a little too high and maybe unnecessarily high in case the facility really truly isn't that valuable as what the list price comes out at. And so no different than other forms of real estate. If there's a bunch of people chasing it that aren't already in the asset class, then they don't know what they don't know, and they may be bidding it up beyond the value of that facility. And then if that happens over and over again, we find a high price market. If you happen to own, or if you're competing against folks that are looking at lease-up deals that have some challenges, or they've just gotten a certificate of occupancy, that's a little tougher if it doesn't have cash flow. And as a buyer, that's a little more unpredictable, especially with the pandemic and a recession. We don't know if, I'd say when, of course, but when we're going to have round 2 of this pandemic, and perhaps round 3, what it's going to do to the economy. So there's a lot of uncertainty. There's some uncharted waters that we're all navigating through right now. And so to buy these an abandoned development, or one that is just coming out of the ground or just opened up and got certificate of occupancy, there's fewer people chasing those. And again, ourselves included, we may not take a look at those unless we can really see that it's incredible opportunity in a market that hasn't been affected very much, and low supply index, rates are high, and it just seems to be called that no-brainer. But all those others that we knew were in decent markets and somewhat competitive, we're taking a strong look at those as well. So that's a long-winded answer to your question, but that's our take on the market right now and what we're seeing in terms of the new folks coming in and how the market is going to be affected by them.
Mm-hmm. Now, what I was wondering have you seen that? Is this large, like big money, like REIT money, institutional money that's coming in looking for like the Class A type things, or are you finding more competition in the B class level facilities?
So, we have seen some funds being created. I've taken 3 calls in the past month of folks that have, found us and they're starting a fund, and, they want us to be a supply of facilities for them, or perhaps to do joint ventures with us and use their money to invest in properties. And they're gathering their money from family offices. Some are coming from the stock market, some are from hedge funds. And as the article mentioned in ISS, and as you mentioned, Roel, there's the folks that are no longer investing in hospitality, hotels, or gaming. Vegas has been shut down and affected quite a bit. The assisted living facilities. There's a whole lot of folks that are investing in those other asset classes that are not seeing the yields, and so they're pulling out. And so they may be savvy investors, they may be savvy real estate investors. They just don't know the self-storage space. And so it's anywhere from the folks. Literally, I guess we don't have enough time, a runway right now, to really say where most of it's coming from, because we're seeing it on all fronts for a while. It's the folks that have $50,000 in a self-directed IRA, to, as I mentioned, the funds that are putting together, 12, 30, $50 million that are going to go chase deals in the marketplace. So we see a whole lot of new entrants coming in.
Mm-hmm. Mm-hmm. So is it that, is there still a sliver of space there for the mom and pop type, the C class? What I was getting at is I was looking at a place. I mean, what's probably too small in your experience from people, from this new money that's coming in to the self-storage space?
And there may be just some individual investors that are coming out and trying their hand at it. And so if you're looking at truly a purely competitive space, there's a lot of folks that again, they don't know what they don't know, and therefore they're fearful to pull the trigger, and they're not really disrupting much. So most of our students that work with us, that are looking at the turnaround projects, the ones that maybe aren't cash flowing, or they're mismanaged, and it'll take a while before they cash flow and reach their full potential. That market is still wide open, and as a matter of fact, I think we're going to see more of that. Well, we know that we've already seen a lot of that. So some of our marketing has gone to the mom and pop owners that are now getting ready to retire, getting ready to sell, and the asset may not be distressed per se, but they just haven't managed it very well. They've fallen behind on technology. They may not even have a website, and they haven't raised rents in 6 years and marketed anywhere else. And so those projects are still out there, and those are the ones that we're focusing on. And there's going to be an abundance of those actually coming out into the marketplace, because some of these folks they may be at the end of their career, at the end of their the life cycle for their investment, and they've depreciated it, and now they don't want to go into another go around, buying another property or moving to the next level when they're again faced with this uncertainty in the market right now and with this pandemic. So those folks that have owned for a number of years, that are up in years, they're selling and doing something different. So from that standpoint, again, we got a pretty big opportunity of those folks, and in our marketing, the mailers that we're sending out, we're finding about a 20% bump in response rate and those folks that are looking to sell their facilities.
Do you think that there's still a bit of an advantage for the investors in our community who are smaller than the REITs, bigger than the mom and pop, with having that personal touch approach? Referring to the analogy you sometimes refer to as you're asking to date someone's daughter. Do you think that I just kind of picture institutional money being a little bit more distant, almost a little too polished, whereas people in our community, they're just regular people like you and me.
Yeah, that's our business model, and that's where our folks shine. And yes, you hit the nail on the head. You know the drill, and if we can build that relationship with these folks, it is truly like they're marrying off their daughter. And so many times they won't answer a direct mail piece to buy their facility if it comes out of state, let alone if it comes from California, Florida, or New York. They just don't trust those big city folks from those states. And no offense to the people in those states, but just the investors that they know they won't come and look at their facility, or they may not be able to get to it easily. They would rather get a letter from somebody that's hand stamped, hand addressed, and is close by, and is offering to come visit the facility, and then we'll pick up the phone after that mailer and call the owner and discuss their facility with them, and willing to take the time to learn about their business and purely take an interest in it, and also assure them that they're going to take that facility to the next level and let it reach its true full potential. And those conversations and that approach is what has allowed us to be able to buy many more facilities than our counterparts that actually have a lot more money and can close with cash and are far more experienced, just because of that personal touch and building that rapport. That means a world of difference at the end that we operate in.
Mm-hmm. Oh, what would you say? And this has come up a couple times,
Mm-hmm.
especially from people who are looking to just kind of get into the self-storage investing space,
Mm-hmm.
where people say that, well, look at that article. That's all the more reason that this space is saturated. So why even try? People kind of
Mm-hmm.
stop themselves
Mm-hmm.
before they start.
Yeah. Well, what we're seeing right now is, like every recession, is that the banks, certainly in the beginning of this, the pandemic, they held their breath and took a collective pause, and it stopped a lot of projects from moving forward, and a lot of those are development projects. And so, just from a pure standpoint of square footage and units coming into the marketplace, there's a lot of folks that have permanently hit the pause button on projects, because the banks can't wrap their head around these speculative type deals, especially in a recession and in a pandemic. And so for that reason, we're going to see existing facilities lease up, and then rates go up, and it just makes it the current supply look that much more attractive and be worth that much more. So have people missed the train? No, no, they haven't. There's an awful lot to go around. There's a whole lot of folks that are looking to sell, and they would rather sell to folks that are willing to meet with them and understand what their business looks like. And although it seems like you could be competing with the folks with more money and more savvy, those of us that are a little more nimble and are willing to do the heavy lifting and create those relationships, we're the ones that continue to win.
Mm-hmm. Now, I kind of know where I might be leading you with this one, but would you recommend that there's any changes with this new information that somebody in this space in our community do?
Yeah, I think to one degree, no, and that is that you got to move fast. I mean, we really have to move fast. And so when you do uncover an opportunity and it's not on the market, and you're having a conversation with the seller, you better move quick. They may have another letter that lands on their desk, or a broker that calls them and promises to sell it to them for more than what they may have considered selling it for. So I think you need to go out there, and you really need to work hard. And again, I say, anything different? No, there isn't. We've always had to do this, but just I think if you don't have more of a heightened sense of urgency at this time, you should. And that's through the entire process. So get your mailers out, do double the amount that you expected, follow up with phone calls, make those appointments. It is a numbers game. And then when you do have a conversation with somebody, move this process along just absolutely as quickly as possible, because anything can happen in the meantime. So that, I think, is probably the only approach. And then just know that you're up against you're up against a lot of folks that may not know about the business. And so if you find yourself in a competitive situation with the seller, and there's some other folks that may be looking at it as well, doing anything you can to put yourself above them, and ask the hard questions of the seller, to ask of that person to say, well, how are they going to manage it? And, do they have financing secured? Because we do. And do they have their management figured out? Well, we do. Do they have a whole team? Well, we do. And assure them that not only if they go under contract with you, that you have the ability to get the deal across the finish line. Whereas, put some fear, uncertainty, and doubt in the seller's mind that this other person that you may be competing with, that they won't be able to perform, and they'll tie up their property for 90 days. And then they may be starting back from ground zero again if they're looking to back out in the market to sell.
Mm-hmm. So it sounds like really stick to the system, that
It
even
really
if
is.
this new information, this pandemic wasn't happening, it's pretty much the same system that you've been talking about prior to all this.
Mm-hmm. Yep. Continues to work. We just need to go out there and double down right now.
Mm-hmm. But it sounds like it just even be extra responsive to the system that you are doing. Like if you do get a response, don't sit on it for 24 hours even. Get
Not at
back to
all.
it.
No, absolutely not at all. Yep. Everything, we just follow the steps and learn along, follow the scripts that we put in place, and just make sure that, you're crossing all your T's, dotting all your I's, have the questions prepared, and extract as much information as tactfully as possible while building rapport with that seller, at the times that you do have them on the phone call, and then schedule that site visit right away, because they still may be skeptical over the phone, but the sooner you can conduct a site visit and go out there and meet them, and if they're willing to press a little flesh, shake their hand, and walk around their facility shoulder to shoulder with them, and have them share, their baby with you, and then that will ward off your competition.
Mm-hmm. The trust in the process that people in our community should have been doing in the first place.
Yeah, some of those folks are wishing they probably would have worked a little bit faster a few months ago.
I guess. Awesome. Well, that's pretty much the time that we got today. So thanks so much for entertaining the questions that I bring to you every couple of weeks, and hopefully you stay safe as well for the next 2 weeks.
All right. Well, you as well, Roel, and appreciate it. And thanks for the time. It keeps me on my toes, and I need a little break from time to time. So thanks so much, and look forward to chatting with you. Well, I'm sure we'll see each other around here sooner or later, but then also in a couple of weeks here for the call.
Yes. All right, Scott. Thanks.
All right. Thanks, Roel. Take care.
Thanks again for joining us here at Self Storage Investing. We really appreciate it. For more great content like this, make sure to click the subscribe button below this video. And be sure to follow us on Facebook, Instagram, Twitter, LinkedIn, and Bigger Pockets. You can also visit us at our main website at selfstorageinvesting.com, where you'll find even more free content, our ebook, and registration to our free webinars and education courses, and much more. Once again, for more great content like this, please click the subscribe button below. Thank you.